Hello, this is Domenico with Easynomics, and we're going to do another quantitative math practice for paper 3. This will be a higher level topic on calculating income tax from a tax bracket that's provided. And this will be put particularly in this playlist that you'll find on the YouTube channel, a playlist dedicated to quantitative paper 2, paper 3 practice, for paper 2 standard level, higher level, paper 3 explicitly for HL students. And this video is going to be a continuation of these series of videos here, Lorenz curve, and then looking at progressive tax rates, calculating average tax rates. And so this will be the third part. Here was part 1, here's part 2, and this will be the third part that I'll put into this playlist. We left off in the second video, again, practicing calculating that we've been provided a annual income tax bracket for a single filer in the US. This is real data from the United States, the income tax brackets for the United States. And we did some practice here of comparing Steve, who's earning $120,000 a year, versus Mary, who's earning $255,000 a year. And by calculating the average tax rate for Steve, who's paying on average 18.23% of total income in income tax, versus Mary, who is paying 23.38% on average in income tax, that the more you make, the more you pay on average, and thus it proves that the U.S. has a progressive income tax system. So this video will be linked below if you want to review that. And in this video, we're going to change the tax bracket for the highest tax bracket. Again, a useful website, and I'll have this linked in the video notes below, is I used data from the Tax Foundation, actually an excellent website. Here we have the 2024 tax bracket data for the United States. And we're again looking at, in this case, single filers. The United States has divided their income tax bracket into 7. 1, 2, 3, 4, 5, 6, 7. Other countries might have less than that, maybe 5 or 3 tax brackets. And so we're going to be using this data for the single filer, which was the same type of data that we were using in our previous 2 videos, approximately, in terms of the percentages, 10%, 12%, 22% for a particular income tax bracket. And in this video, we're going to increase the highest tax bracket from 37% to 50%. Why would we do that? Well, let's look at the history of the highest marginal tax rates in the United States over time. And you might be shocked to discover that the highest income tax brackets were taxed at 94% of any amount above that tax bracket. And this was, around 1942. So during World War II, went up again, 1945, and it stayed up there throughout the 1950s into the 1960s. And that was a relatively boom period for the U.S. Of course, at that time it had manufacturing. It was a different period, different time. Europe was destroyed, Japan was destroyed, so the U.S. was the only industrial power that was able to manufacture and export. And then we see that in the 1960s, it was reduced to the 70% for the highest tax bracket. And then with the Reagan administration in the 1980s, approximately it was dropped to 50%. And then 1989 dropped again to 28% and then raised. And it's been sitting at 37%, perhaps for the last 3 decades. All right, but very curious to see that the highest income tax bracket, the wealthiest Americans, were paying 94% of any income above that tax bracket. And today it's at 37%. So in this video, we're going to raise it to 50%, just as a hypothetical question that you could see on a paper 3. And there was actually a paper 3, I believe in 2022, October, November exam that's similar to what we're going to do in this video. So let's compare the US to Europe. Income tax brackets in Europe are relatively high for the top income tax bracket. Here we have the map illustrating this, but it's perhaps easier to see if we look at it like this. And here we have the highest tax bracket in Denmark. People in that highest income tax bracket facing 55.9% income tax in that particular bracket, and France being the second highest at 55.4%. And then Austria, and we're going to use Austria as our example, at 55%, Spain at 54%, and so on. So European nations have relatively higher income tax brackets for the tops bracket relative to the United States, which is at 37%. Taxation in Austria. So this will be our applied example. Here we can see in Austria that they updated their income tax brackets in 2016, and it's divided to 1, 2, 3, 4, 5, 6, 7, 8 tax brackets. And for the lowest income tax bracket, if you're making between 0 and 11,000 euros, 0%, and the next 11,000 to 18,000 is taxed at 25%, and the next anywhere between 18,000, 25,000, 35, and so on. And for the top bracket, for those making over €1 million a year, there's a 55% income tax. But we're going to use 50% for our example today. So that's the income tax bracket for anyone in Austria earning anywhere between 90,000 to a million. All right, any amount in that tax bracket would be taxed at 50% in Austria. I'm also going to put this in the links in the video notes below. This is a very interesting podcast from Freakonomics, season 14, episode 31, 10 myths about the U.S. tax system. I found it very enlightening, particularly the discussion of how much valued added tax is contributing to central government tax revenue versus the United States. So all the consumption occurring in Europe, whenever you buy a good or a service, that's going straight to the central government, from my understanding. Whereas in the U.S., much lower rates and thus much lower tax revenue for the U.S. government versus European governments. And I guess, from what I could take away from that podcast was that, there's more tax revenue being generated, not just from income tax in Europe, but from taxation of goods and services. And that's enabled them to provide, more in public goods, particularly public healthcare and perhaps public education and so on, versus the US. So I highly recommend this podcast. Definitely check that out. So let's get into this question. So here we have a paper 3 type question. Let me just zoom in just a bit. Here we go. Just to zoom in just a bit there. And we're going to break this down. We're taking our exam, or we're looking at this question, and I would recommend that you kind of highlight a few things as you read. And so we're going to do that. Let's go ahead and highlight as we read. We're going to actually make this perhaps yellow. So here we have the marginal income tax rate in the United States, providing this table. It's annual income for a single filer. And here we have the different brackets and the marginal income tax rates. Fine. And here we have information. Here's John, and he's earning $755,000. So that's going to be important. And then I look at the first question. AI, using the information table 1, calculate John's total income tax. And then question 2, using your answer to part 1, calculate his average tax rate. So let's highlight that. We're going to first calculate the total income tax being paid by John. And then we're going to calculate the average tax rate with that data we've calculated. And then we're just going to state his marginal tax rate. Okay, so I'm going to ask you to pause the video and try calculating this on your own. All right, please, please pause the video now. Okay, so let's check your work. How did you approach this question? So let's go ahead and do this together. So we're going to do A1 first. So here, John making $755,000. And so he is in this top bracket here, but the U.S. government is going to take a certain amount in each of these brackets, and then we're going to sum that all up. All right, so from 0 to 11,000, so here he's making, let me use a pen. Here he's making $11,000 taxed at 10%, so I'm going to multiply that by the decimal value of 10%. 0.10, and that's going to equal, I'll put on this side as the final answer, or perhaps maybe I can squeeze it in. Let's see if I can squeeze it in. Oh. So that's going to work out to about 1,100. Okay. And then I can move on, $11,001 to 47,000. So 47,000 minus 11,000. That's going to work out to $36,000 times the decimal value of 12%, 0.12, and that's going to equal 4,320. So I'll put that $4,320. of taxable income. And then the next bracket, 47,000 to 100,000. So 100,000 minus 47,000 is going to work out to 53,000 times the decimal value 0.22, and that's going to work out to 11,660. And then we move on, 190,000 minus 100,000, so that's 90,000. And this is fine for an exam, even though it says 11,001. It could state, 35,999, or it can just round it up to 36,000. The IB evaluator will take either answer. That would be fine. So don't worry about that. Just round and make it easier. So 90,000 times the decimal value of 24%, 0.24. That's going to equal 21,600. And then 250,000 minus 190,000. Yep, it's going to be 60,000 times the decimal value of 32%, 0.32. And it's going to equal 19,200, 19,200. And then we're going to take 600,000 minus 250,000. It's going to work out to 350,000 times the decimal value of 35%, 0.35. It's going to work out to 122,500. And then we're going to take 755,000 minus 600,000. So he has a remaining amount, 755,000 minus 600,000. And that's going to work out to, if I did that, it's going to work out to equals to 155. Oops, take that back. I know there's a faster way to do that. Just bear with me. Up there. Okay. So that's going to work out 755,000 minus 600,000. That's going to work out to 155,000 above the $600,000 threshold, multiplied by 37% as a decimal value. And that's going to work out to 57,350. 57,350 dollars. Okay, so this is how we would break it down for the test, taking a certain amount in each bracket multiplied by the marginal tax rate. And now we have to calculate the total income tax. So what I'm going to do is add that all up. So that would be visually just adding up these values here. All right, so going from down this box, let's take that up here. I'm going to add up this entire box here of data, and 1,100 plus 4,320 plus 11,660 plus 21,600 plus 19,200 plus 122,500 plus 57,350, and that's going to work out in total for this answer. That's going to be a total $237,730. So there is my total income tax right there. Okay, fantastic. So were you able to do that? Did you calculate that correctly? Is all your workings accurate? Now let's move on to question 2. We're going to calculate the average tax rate. All right, the average tax rate is going to be equal to the tax paid divided by the total income in that year multiplied by 100. So we're going to take the 730 divided by the total annual income, 755,000. Multiply that by 100, and that's going to give us an average tax rate of 237 to 75 times 100. It's going to give us 31.487%. And on the cover sheet of paper 3 typically says up to the second decimal value, accurate up to the second decimal. So we're going to do 31.40 and we're going to round it up to 49. Okay, so there is his average tax rate. His average tax rate, 31.49. And the marginal tax rate, just stated, what's their highest tax bracket? And that's going to be equal to 37%, just stating their highest tax rate. 37% is their highest marginal tax bracket. Okay, so we've done A1, A2, A3. Fantastic. All right. Let's see here. Oh, yeah. In addition, right, just to double check your work, just another little strategy to make sure that your calculations were correct. You can also add up these numbers here, 11,000 on down. And when we add all that up, that should be equal to the total income of John. So 11,000 plus 36,000, 53, 90, 60, 350,000 plus 155,000 is going to equal 755,000. All right. Great. So now let's move on. Let's move on to question 4. Question 4, using the information table 1, calculate the additional income tax John would pay if the U.S. Central Government decided to increase. All right, they're going to increase the marginal tax rate for incomes above 600,000 to 50%, as it is in Austria since 2016. So we're going to increase that higher tax bracket in the United States from 37% to 50%. And we want to discover what's the additional income tax that John is going to have to pay. So how would you do that? Think about that. I want you to pause the video and attempt that question on your own. Please go ahead, pause the video, and try it. Okay, so let's try to tackle this question. So there's a couple ways we can do this. I'm going to show you different strategies. And this question here, question 4, is very similar to the October-November 2022 paper 3 exam. Very similar. So let's go ahead and do this. So what we need, all right, I don't need to calculate all of this work. I could, but it's maybe a little bit too much time and effort. I just want to focus on the amount of money here. All right, this 755,000 minus 600,000. That amount is what's going to change. That amount is changing. The tax bracket is changing from 37% to 50%. All right, let's use a different color for this question. We're working on this question. Okay, so for question 4, what I would do is first take the amount that we're focusing on. 755,000 is John's total income minus the 600,000. And that's going to be equal to $155,000. That's going to face this change in the marginal tax rate from 37 to 50,000. So that's the answer that we see here, $155,000. All right, what I'm going to do is multiply it by 50%, the decimal value of 50. All right, 50 divided by 100, the decimal value is 0.50. That's going to equal 77,500. Then I'm going to also take that amount, 155,000, times 0.37, which is the original marginal tax rate, and that is going to equal 57,350. Okay, and there we've done it. So what's the change? All right, what's the difference between this and this? 77,500 minus 57,350, and we see the additional amount. John's going to have to pay an additional $20,150 of additional income tax, as the marginal tax rate went up from 37% to 50%. Okay, what's another way of approaching this question? Another way could be this. And this would be accepted as well. Either one would be accepted. Let's use maybe this color. Other students might approach this and say 755,000 minus 600,001, right? Taking, not rounding, but just sticking with what you've got. That's fine. What you're going to get is 154,999 times 0.50. And that's going to equal 77,499.50. Okay. And we could take again that amount, 154,999 times 0.37 equals 57,349.63. And we're going to calculate what's the difference. We're going to subtract the two, and we're going to see the difference here is 20,149.87. So either answer is correct. All right, let's highlight that. It's our final answer. We have 20,150 as additional income, or this would also be accepted by the IB. Perfect. What's an even faster way to calculate this? All right, another way you can do this is as so. Instead of doing 155,000 times 50% and 37%, why don't we just focus on the difference between the two? So another student could approach this saying, okay, I'm going to take the 50% marginal tax rate multiplied by the original 37% tax rate, and the difference there is 13%. That's a 13% increase in the marginal tax rate. So I'm just going to do that. I'm going to take that value and look at the amount that John's paying that's facing that higher tax bracket, $155,000. And we're going to multiply that by the difference between 50% and 37%. That's going to be 0.13, and that's going to equal 20,150. So I've calculated it correctly. This amount is the same as this amount. So those are two approaches, all right, to calculating. This is a little bit faster, all right? Maybe this is a little bit less work, but that's still fine. So great. We've done this work. We've calculated question 4. Excellent. Now let's finish this up. Let's move on to question 5. Okay. Using your answer in part 4, calculate John's average tax rate. Okay. So let's go ahead and do that. Well, actually, pause the video and try it. Pause the video and attempt that question. Okay, so let's take a look. Oops, where's my... Here we are. Okay. So here we're looking at question 5. Calculate the average tax rate for John at that higher tax amount. And I can take my original work here. All right, I can take this original work over here. All right, and what I'm going to do is it's going to be equal to the original 237,730 plus, I'm going to take this value here, the workings from before. All right, the additional amount plus 20,150. We're going to divide that by his total taxable income, $755,000. And we're going to multiply that by 100, and that'll give us our average tax rate. So if you do that, 237,730 plus the change, 20,150 over the total income, and that's going to work out to, let's see here, it's going to work out to 34.156, or I can simply state 34.16, round up. And so that is his new average tax rate. Okay, so here's my another final answer that I have. All right, yeah, I'm going to do for this question. All right, for this question, there's my answer. Okay, so he went up from 31.49% of total income being taxable by the government to 34.16%. So it's just about under 3% increase in income tax paid by the government raising income taxes from 37% to 50% for the highest tax bracket. And the last question, with reference to Part 4, state John's marginal tax rate. We know that his new marginal tax rate is simply 50%. His new marginal tax rate is now equal to 50%. Okay, and that's it. If you have any questions, you can comment those questions below, and I will put all the workings and notes and links in the video notes as a reference for you as well. And that's it. Thank you so much, and don't forget to subscribe and to like.